Hey everyone, and welcome back to the channel. Today, we're taking out our crystal ball and looking ahead to 2026. What does the future hold for two of the most popular precious metals, gold and silver? This is a big topic, so grab a coffee, get comfortable, and let's dive into some serious market analysis. First, let's set the stage. The past few years have been a roller coaster for the global economy. We've seen inflation spikes, aggressive interest rate hikes by central banks, and geopolitical tensions that have kept investors on their toes. These are the key ingredients that cook up the price action for gold and silver. So, what happens when we fast forward to 2026? Let's start with the king of metals, gold. Historically, gold is the ultimate safe haven asset. When uncertainty looms, investors flock to gold to protect their wealth. As we look towards 2026, one of the biggest questions is, what will central banks be doing? Many analysts believe that by then, the cycle of rate hikes will be well and truly over. In fact, we might even be in a period of rate cuts to stimulate economies. Why does this matter for gold? Lower interest rates are fantastic news for gold. When interest rates are low, the opportunity cost of holding a non-yielding asset like gold decreases. Think about it. If your savings account is giving you a tiny return, that shiny gold bar looks a lot more attractive. So, a potential shift towards a more dovish monetary policy by major central banks, like the Federal Reserve, could be a major tailwind for gold prices. Then there's the US dollar. Gold and the dollar usually have an inverse relationship. When the dollar is strong, gold tends to be cheaper for foreign buyers, and vice versa. If the US enters a phase of monetary easing, the dollar could weaken. A weaker dollar makes gold more affordable for investors holding other currencies, which naturally boosts demand and could push prices higher. We also can't ignore the massive demand from central banks themselves. Countries around the world, particularly in the East, have been on a gold buying spree, diversifying their reserves away from the US dollar. This trend shows no sign of slowing down. By 2026, this consistent, large-scale buying could have significantly reduced the available supply on the open market, creating a solid price floor and providing upward momentum. And finally, let's talk about geopolitical risk. Unfortunately, global instability seems to be a new normal. Whether it's trade disputes, regional conflicts, or political uncertainty during major election cycles, these events create fear. And fear is a powerful driver for gold demand. While we can't predict specific events, the general climate of uncertainty is likely to persist, keeping gold relevant as the ultimate portfolio insurance. So, pulling it all together for gold in 2026, we have a potential environment of lower interest rates, a possibly weaker US dollar, continued strong buying from central banks, and persistent geopolitical uncertainty. All of these factors point towards a very positive outlook for gold prices. Some of the more bullish analysts are even throwing around numbers that would see gold pushing past its previous all-time highs. It's not a guarantee, of course, but the fundamental picture looks incredibly strong. Now, let's switch gears and talk about gold's more volatile but often more exciting little brother, silver. If gold is the steady king, silver is the high-energy prince. Silver has a dual personality. It's both a precious metal like gold, but it's also a critical industrial metal. This dual nature makes its future particularly fascinating. First, let's look at silver's monetary side. Silver often moves in tandem with gold. If gold is in a bull market due to the macroeconomic factors we just discussed, lower rates, a weaker dollar, silver will almost certainly be pulled along for the ride. In fact, silver often outperforms gold during precious metal bull markets. This is because the silver market is much smaller than the gold market, so it takes less money to move the price. This leads to that famous volatility and potential for explosive gains. But the real story for silver leading into 2026 is its industrial demand. This is where things get really interesting. Silver is an essential component in some of the fastest-growing technologies on the planet. The number one driver? The green energy revolution. Silver is a superstar when it comes to conductivity. It's a key ingredient in solar panels. As countries around the world push aggressively to meet their climate goals, the demand for solar panels is expected to skyrocket. More solar panels mean more silver is needed. By 2026, the sheer volume of silver being consumed by the solar industry alone could be staggering, putting a major strain on global supplies. It doesn't stop there. Think about electric vehicles, or EVs. Every EV contains silver. As the world transitions away from gasoline-powered cars, the demand for EVs will continue to surge. More EVs on the road means more silver being used in manufacturing. And then there's 5G technology and the ever-expanding world of electronics. From your smartphone to your laptop to the complex servers that power the internet, silver is everywhere. The Internet of Things, where everyday objects are connected online, will only increase this demand. So with silver, you have a potential perfect storm brewing. On one hand, you have the monetary demand linked to gold's performance. On the other hand, you have an explosion in industrial demand from sectors that are not just growing, but are at the heart of our future global economy. The big question for silver is supply. Will miners be able to keep up with this surging demand? Silver is often mined as a byproduct of mining other metals like lead and zinc. It's not always easy to just turn on the taps and produce more silver. If demand from the solar, EV, and electronics industries outpaces what miners can pull out of the ground, we could see a significant supply deficit. Basic economics tells us what happens then. Prices have to go up. So when we look at silver in 2026, the potential is immense. It has the safe haven qualities of a precious metal, combined with the explosive growth potential of a critical industrial commodity. Many analysts believe silver is currently deeply undervalued relative to gold, and the coming years could see it playing a serious game of catch-up. So what's the bottom line for 2026? The macroeconomic winds seem to be shifting in favor of precious metals. For gold, a potential pivot by central banks towards lower interest rates, combined with persistent demand and geopolitical risks, creates a very bullish case. For silver, you have all of that, plus an industrial demand story that is simply off the charts. Of course, no investment is without risk, and the world can change in an instant. This is not financial advice, but an analysis of the trends and factors that will likely shape the market. It's crucial to do your own research and understand your own risk tolerance. But based on the landscape we see today, the outlook for both gold and silver in 2026 looks incredibly bright. It could be a defining period for precious metals investors. What do you think? Are you bullish on gold and silver for 2026? Which one do you think has more upside potential? Let me know your thoughts in the comments below. I read every single one. Thanks so much for watching, and if you found this analysis helpful, be sure to hit that like button and subscribe for more deep dives into the markets. I'll see you in the next video.